While many people may not have heard of Augusta National Golf Club, have you heard of the Augusta Rule? It's a rule in tax law that seems to apply to more businesses than it might seem on the surface, but you better have the details in place. My guests today help their clients with their tax and financial planning, including claiming the Augusta Rule when it's appropriate, and they're going to lay it out for us. I'm Carl White, principal at Mark Advisory Group, which is a healthcare marketing agency, and I'm also the host of PracticeCare. The mission for both is the same, and that's to help private practice owners stay private. Not only is that usually what they want, but care is better when the provider owns the place because that's when they're going to have the most freedom to make the clinical decisions they think are best. It's not always the same when somebody else owns the practice. And so our mission is to try to keep them private, keep it simpler, and let's just try to keep it that way. Two guests today, Stephan Goldsmith and Kristen Engeron. Stephan Goldsmith is president of iAccounting Solutions, and Kristen is the CEO of Legacy Consultants. Stephan and Kristen often work together to help medical practice owners navigate the tax and financial pitfalls so that they can run their practice in confidence and gain valuable time back in their lives. It's another 2-on-1. We don't do this very often, but I'm looking forward to it. Both of you, thank you for coming on PracticeCare.
Great. Thanks for having us, Carl.
Thanks for having us.
Yeah, absolutely. And I said to you before we started recording, I think I know I read the Augusta Rule, trying to understand it 4 or 5 times. I'm not sure I'm there. It sounds cool, but I'm looking forward to sort of pulling the veil out and making sense of it. But first, I want to start where I always start. I want our guests to get to know you a bit better. Your bios were even shorter because there's 2 of you, and we want to keep things a little sort of in the half-hour-ish per episode. So, Kristen, please go first. Just tell us a bit more about yourself.
My name is Kristen Engeron. I'm located in a little small town outside of New Orleans, Louisiana, in Houma, Louisiana. Legacy Consultants has been around for 14 years, and we specialize working with entrepreneurial physicians and attorneys doing outsourced CFO work, such as like monthly accounting and tax planning on a personal and business nature, and also looking at exit planning. And Stephan and I work very well together. We have clients all over the country. So between my skill set and his skill set, we kind of make for a great 1-2 punch. So
great. And Stephan, my apologies. I now know I mispronounced your name. I'm really sorry about that.
That's all right. I get it all the time, but
all
no
right,
worries.
well, I'm sorry to add to the list. But tell us,
no
fill in your bio for us.
Yeah, sure. Stephan Goldsmith, resident of Southern California. I've been here for about 14 years. I've been on both sides of the country for a few years. I've been in North Carolina for a few years, but now I'm back to California. But I started iAccounting Solutions. It's because I saw a gap in the need of, compliance tax law with actually proactive help for business owners. And so that's what led me to start iAccounting Solutions about 14 years ago. And then working with Kristen, I bring a unique skill set, which is the tax planning side. Beyond that, family, father of 3, and love the outdoors and love everything that Southern California has to offer. And just grateful to be an entrepreneur myself.
Right. Excellent. Okay, good. Thank you for that. Let's just jump right into it. And I'm going to, whoever wants to take this first question, please tell us what the Augusta Rule is.
All right, Chris, why don't you go ahead and go for that?
Okay. So as you kind of teased in your intro about it, has anybody heard of Augusta National? So the rule stems from people in Augusta were renting out their homes, and the federal government said that the rent that they collected was to be recognized as income, but it was their primary residences that they were renting out, and they were renting them out for less than 14 days. So,
and just to say, so this is for the Masters Golf Tournament. It's a week in April, but people come early. And so for around 14 days, people from all over planet Earth will pay lots of money to stay there, and hotel rooms run out and people rent out their homes, right? And that's where this kind of came from.
Yes. And
so that's
the history of it. But when this rule came out, there weren't hotel rooms like we think about hotel rooms now in the modern economy, right? Okay. So Augusta was still a very sleepy town. Augusta, the Masters tournament was the big draw. And so you had a lot of residents, before there was an Airbnb or a Vrbo, this was how people stayed in Augusta. So that's the history of it, which is actually kind of interesting. And the strategy itself, basically what came from the tax ruling was that it stated that as long as you rented out your primary residence or a vacation residence for less than 14 days, and the rest of the days of the year you use them for your personal use, you did not have to recognize that revenue as rental income on your personal income taxes.
Okay.
So that ruling then got extrapolated, and it turned into a very good tax strategy. And again, when we talk with our clients, we always talk about quote unquote moving the needle, right? So do you really care what your W-2 gross income is, or do you care about what your gross check is, or do you care about what your net check is? What is it that you can actually spend on a day-to-day basis for whatever it is that you need to spend it on? So what this rule then extrapolated to was it was a way for businesses that were S Corps, C Corps, partnerships to essentially rent out their primary residences or their vacation homes to have shareholder meetings. That would then generate, the business would then pay the rent to the homeowner.
Which is
For
the
that,
same.
it would create a business expense, which reduces your taxable income inside your business. And then the homeowner would then have this tax-free pile of money by which to pay whatever expenses needed, not necessarily all of them by any means, but would have a stream of tax-free income by which to service this primary residence or a vacation home.
So you could do like
and it's very, and that is a very simplistic explanation of what it actually accomplishes.
Right. And I'm curious, just to go back in time a bit, one of the 5 sources that I read made the reference of, quote, to protect the people of Augusta. And I was just like, all right, so they're making rental income, they're paying tax on the income. Just out of curiosity, what was the protection that was sought?
I think it was probably from a economic development standpoint of it's protecting the people of Augusta. It's protecting their ability to generate this income. Because like, as you said, people come to Augusta and they go on wait lists for years to get these tickets. I have fortunately been a beneficiary of attending the Masters, and it is one of the most beautiful places I have ever been. The cameras just do not do it justice.
Yeah.
But when you think about, if you've got some homeowners that had been renting out their homes, and let's say they were getting paid $10,000 or $15,000 for a week, and that's $10,000 or $15,000 of tax-free income to you, then it goes that it is protecting those people of Augusta, because that's money that goes back into their local economy. Maybe they're using that money to pay tuition, to help pay the mortgage on their house, to help pay, insurance costs, or to make improvements, or to use that money to, buy another piece of property, or to just pay their monthly bills. But I think we all agree that, in protecting the homeowners and the property owners of Augusta, it's inherently an economic generator for them individually, which is the most fundamental way to get money into an economy, is to put it into an individual's hands, and to put it into their hands on a very tax-free basis is the best of both worlds.
And so the rental income, that the tax is a federal tax, right? If it were taxed.
Correct.
So to kind of, continue your argument, that money would be taken out of Augusta and sent to Washington, right?
That's correct.
So it couldn't stay in Augusta. Okay, so maybe that's the protection that was envisioned, I guess. Okay. So then essentially, if I run ABC Company, I live at my home, and ABC Company is, I don't know, in the center of town, I could have a shareholder meeting or a board of directors meeting or something in my home once a month. That's 12, that's not 14. I could charge the company. The company's got to pay rent on this, just like it would rent any other room for the meeting.
Right. Yeah. If you were to go out and buy and rent a space somewhere else,
you pay for it.
You pay for it. So that's the same. It's the same concept.
Same thing. But the individual, Carl, the person who lives in this home and who just had a shareholder meeting here, doesn't have to pay any tax, at least federal tax, on the rental income for that.
Usually
That's
usually no state tax either, because
usually
what,
okay. I was
yeah,
gonna say
this
state to state probably matters, but okay.
Right.
yeah,
Yeah,
so
that was the caveat I was going to add. But usually on a state level, it's most of the states that we've worked in has been exempt from states.
Okay. Okay. So what are the requirements to do this? I mean, you got to believe a lot of I'm going to go out on a limb and say a lot of at least business owners who could benefit from this are not, either because they're not aware of it or they're confused by it. Maybe that wouldn't surprise me if some accountants are confused by it or not quite aware of it either. So
yeah,
what are
I've run into
the
some clients who said previous accountants won't do it. It sounds fishy, or
hmm.
it sounds, and
Or
the
it sounds too
section,
good to be true. Yeah, yeah, yeah.
it's section 280A is the code, IRS code, so you can look it up. Anyone can look it
280
up, and
letter A, 280A. Okay.
280A, you can look it up and check it out. But I mean, there's kind of a long laundry list to make sure that the Augusta rules be properly implemented. So first, you have to start with your corporate structure, right? Are you
Okay.
a C Corp, S Corp partnership? Just single member LLCs do not count for this, okay? Because part of this is there has to be an onus on the corporation to have some compliance, right? So they have to have board meetings and have to be required to have board meetings. So
Okay.
usually that's an S Corp or a C Corp. And so first you have to have that, right? You have to, okay, so now I know I qualify, I can actually do this. Okay.
Mhm.
The next part is it's just not a free for all. Like I can charge whatever I want to charge,
Yeah.
right? So you have to think about it this way. If you were to go out and rent a space for your board meeting, what does that space look like? Is it a table and chairs? Does it have nice decor? Is it a nice area of town? Is it similar to what your space is, right?
Mhm.
And so the next part of this is to figure out, like, well, how much can I actually charge for this board meeting,
Mhm.
right? And this is where it gets a little sticky and it becomes a little labor intensive for the taxpayer, and that really should go out and get comps, right? You could
Yeah,
call
right.
like 3 or 4 different places, either hotels or venues, to figure out how much the space costs. You can go on something called peerspace.com, which is PEER space.com,
Okay.
which is kind of like the Airbnb of business spaces.
Oh,
So you can look and see, okay, what can I rent in my area for 8 hours? And you tell clients, like, look, assume a board meeting is going to take 8 hours, even if it doesn't take it only takes an hour or two at your house. But if you're going to rent a space, usually places are going to rent out the whole day, right? They're not going to
sure.
just rent
Oh,
one
yeah.
or two
Okay.
hours, right? And so you have to find out, like, how much is it actually going to cost, right? And then once you determine that step, then you have to go to, okay, well, let's actually hold the meeting. You hold the meeting, and you need to take records or minutes of what you discussed, what was resolved, what new items were discussed. And then you have to have an agreement between the company, which is your company, and also the owner of the property, which is going to be probably usually one and the same. So there needs to be some kind of rental or lease agreement on file. Okay. And then the payment actually needs to be made from the corporation or the business to the individual.
Okay.
Right. And so those are the basic steps. There's lots of little moving pieces, like I said, in that to get that set up. But once you spend the time to get it set up properly with like the lease rental agreement, you go out and get your comps, then it becomes almost an automatic thing where you can
That sounds like what
just
you
have
would do to find a space. You'd find a
Yeah.
space, you'd
exactly.
choose on features and benefits and price, you'd sign an agreement with whoever owns it or is leasing it, and then you'd go have it. I mean, it sounds like you have to,
And if you're not renting out
Right.
and if it's not your primary residence, let's say you have a vacation home, let's say you have a lake house or you have a beach house
Mhm.
or whatnot, it's easier to find comps because you can literally go out on VRBO or Airbnb and see, like, hey, what's the beach condo renting for? If I'm going to rent it, what's the average that it's been renting for? Oh, it's been renting for $2,000 a day. It's been renting for $800 a day, whatever. And so especially with vacation home properties, it tends to be a little bit easier to get those comps because it's typically in a high rental
Got
area.
it. Okay.
Yeah. Right. So the amounts will differ depending on what area you're in, right?
Mhm.
Compared, like, if you're in, like, I'm in California, so if you're in the Los Angeles metro or the Bay Area metro, those comps are going to be a lot higher than if you're out in the
Sure.
countryside, right? Or if you're out in a rural area.
Right.
And so I think the trick is, though, is not to get too, and this is with anything with dealing with the IRS and taking deductions, is don't get too greedy with it, right? Could
Mhm.
you find a country club that costs $5,000 a day? Yes. Is that comparable to what you're renting in your home. I don't know, maybe, maybe not, right? It just depends on what kind of home you have, right?
Yeah.
So, I mean, that makes a difference. And so, like, if regular meetings are, meeting spaces are costing between $1,000 and $2,000 a day, that seems reasonable. $5,000, $10,000 a day, probably unreasonable. Could come up as a flag under it and could get audited, right? And you want to make sure you can defend yourself on an audit and do this actually the right way.
So what if?
I'm sorry.
Oh no, go ahead, Kristen.
No, what I was going to say is going back to Stephan's point earlier about being able to defend on an audit. Again, nobody wants to get selected for an audit ever. It is coming for if you own a pass-through entity with the funding the IRS has gotten, it is coming. Like there's no two ways about it. But what I want your audience to understand is that this is not an aggressive tax planning strategy. It is a rarely is there such a great strategy that is a black and white strategy that is written into the code that is just not taken advantage of because people don't understand. Again, once you get it set up, it will run automatically.
Yeah.
But again, to your audience members, don't be afraid to address this. And you do have some accountants and CPAs come tax time don't want to do it for their clients because it does involve some work. And so on their part and on the taxpayer's part.
And or they don't understand it completely.
Right.
Correct.
Or it's not too conservative or it doesn't feel that way. Or they heard about somebody who got whacked by it and like, oh my God, that colors it forever.
Right.
Just like anything else gets a bad rap for incomplete information.
Correct. Yeah. But it can't, but again, it moves the needle for business owners and as far as increasing their net worth. And again, it's all about how $1 comes in the business and what's the most efficient way for it to go out.
Right. So it's a business tax deduction on the business.
Correct.
And at the same moment, it's tax-free income to the person.
That's right.
Wow.
Right.
So what if you have in your place of business a room where you could have the same board meeting? Like I'm starting to feel like, my mind's starting to turn on what could get you in trouble. But like, let's say you've got a meeting room and it could reasonably house this same meeting. Is that a problem for implementing this? Like
a meeting room at your house?
No. Let's say that so we'll go back to ABC Corp and I've got, my place of business is in town and I've got a meeting room and I could just have our once a month board meeting there instead of in that case, I don't think I get to use the Augusta rule, but might an auditor say, why don't you just have it there?
No, because you could go out and find a space. Because what if you don't like the color of paint on your wall?
I don't know.
What if you like? Yeah,
or you want to have a shareholder meeting off-site because you don't want staff to be able to hear. I mean, there are a number of reasons why you may or may not want to have it at your office. Okay. The thing is, again, the government isn't saying, oh, if you have a meeting room at your office, you're not allowed to take the Augusta rule. Again, if you do the steps, there's no question as to, oh, well, you have this other facility that you could have had it at. Well, we didn't want to have it there for X, Y, and Z reasons, which are all legitimate reasons. So, and again, most shareholder meetings, for small businesses are typically held off-site primarily for organizational and staff reasons. So, and there may just be one shareholder. Lots of our clients have one shareholders and clients that laugh. They're like, well, wait, I've got to have board minutes of a conversation that I had with myself. And I'm like, you know what? I personally use Augusta strategy. And when I have my shareholder meeting, I'm 100% owner, but I bring my operations manager because we spend that day going over, hey, this is what we're trying to accomplish for the month. Where are you on this project and whatnot? So it is a shareholder meeting, but I kind of let her know this is what we're accomplishing. And and then I've got other things from a ownership standpoint that I need to work on. And then I'm able to have that, I'm able to have that quote unquote quiet time off site where I can actually get work done. And so even though it's only me, one shareholder, it still applies.
Got it. And then yes, it does. And I think, Stephan, you were starting to go down the path, or you asked me, so what about work from home? What about single employee?
Right. The IRS does not preclude taking the Augusta strategy by whether or not you have an available space or not, right? It's just
Okay.
that if the business has a need, wants to go out and rent something, they can go rent it, but instead of renting it outside, you can rent your own home. So they don't put a requirement on that.
What if you work from home?
It doesn't has nothing to do with it. I mean, if you have,
Okay.
like, if you have, if like I'm at home right now too, but I also have an office, right? Administrative office that I work out as well. Like if I decide I want to have a board meeting just for the very reasons that Kristen talked about, I can go out and rent a space because let's say I need a change of scenery, I need a change of pace. That's completely up to the business. They can do that. They have full latitude and to do whatever they want as a business. The IRS can't dictate that part of how you run your business. They can dictate, make sure
Okay.
you qualify for the rule, you need to follow and pass the tests, but outside of that, the sky's the limit.
So for business owner X who works from home, they can use their home under the
Yeah,
Augusta
so,
rule, the
so
same
this is
place
not,
where they work every day?
Mhm.
yes, they can. Yep. This is not the same as the home office deduction. This is not the same
Yep.
as, this is something completely different.
Okay. And it's the same steps? Go get comps in your neighborhood and
Yep.
Yep.
that's what you would pay?
Not necessarily comps in your neighborhood, comps for spaces that would be comparable to what you're trying to rent.
Got
Does
it.
that make sense?
Right.
Yeah.
So like if it, might be hard to get comps in a neighborhood depending upon where you live.
It's true.
Because you're not going to rent out a room in a residential area for one day. I mean, that really doesn't exist.
So you
Maybe
get comps in your local area, whatever they would charge for
yeah.
whatever
Right.
length of time you think the
Yeah,
meeting is, that's what you apply.
we tell our clients, look, go get 3 comps, call some hotels. Like, if you're not sure where, call a hotel. We get the 3 comps, stick it in your file. We have it for documentation.
And it's whatever they're, so right. So you said earlier, like, let's say you need 2 hours for a meeting, but the least amount of time that the Marriott down the street will rent it is for a day. So that's your comp, right?
That's
your
exactly right.
comp.
It doesn't
Yep.
disqualify it as a comp. That's your comp.
Well,
Correct.
and like
Yep.
I had a client that was in New Orleans, and their comps that they got, they called the Ritz-Carlton. They called some of the higher end hotels, and I'm like, that's your prerogative, right? Like
Mhm.
there's nothing that says you have to call the cheapest hotel, but again, you want it to be able to pass audit. But again, even when we looked at some of the cheaper hotels,
Mhm.
they were comparable. So we basically took the average of 3.
Okay.
Even like we took a cheap, mid, expensive, and they were very happy with that. I mean, and talking to, again, knowing your audience, being medical professionals, owning their own practice, this tends to be, especially when you've got a group of physicians, or group of medical professionals that, and ER docs are a good example of this. You've got 4 or 5 ER docs that have their own practice, but they contract with the hospital. So they still have their own practice,
Mhm.
contract with the hospital. They need to get together once a month to say, hey, look, where are we on billing? Like what's going, is the hospital going to renew
So
our
business meeting.
contract?
Okay.
Yeah. And so, if the 5 of them own that practice, they can have they need to have a shareholder meeting once a month. And let's say each one of them has a vacation property. Okay, we'll rotate
Rotate it.
between each one of the shareholders, where there are each one of their homes in the local area if they don't want to go. To do that. And so again, even if you've got multiple shareholders, it's still a way, it doesn't have to necessarily benefit just one shareholder. You can
Okay.
kind of, for lack of a better phrase, spread the wealth. And
Okay.
it's a way, again, for those shareholders who happen to also be employees of the practice to get tax-free money out of the practice and still create a business expense to reduce the taxable income
Got it.
that the business ends up paying.
What are some of the biggest, more common misconceptions you two see that you could clear up?
Can I?
Yeah. Go ahead, Kristen. I got one too.
Yeah.
Go ahead for it.
The biggest one is only super uber wealthy people can know about this and can do it. That's the number one misconception.
Okay. Anybody.
Yes.
As long as you meet the
Anybody can do it.
qualifications. Yeah.
Yes.
Okay.
And what I see all the time too is in forums and all over the internet is I have home office, so I can't take the Augusta rule. That's
Mhm.
it's not correct. So it's not the
Okay.
same thing. Yeah.
Okay. And then the other question I had is, what kind of screw ups do you see people making?
Ooh.
Well,
don't follow
just to get ahead of it.
those.
I mean, don't disclose anything, but like, you know,
number one is they don't reach out to someone who understands the Augusta Rule and take advantage of this. And then probably number two is just not getting all the nuts and bolts in the right place, right? So there's definitely a way you can do it on your own, but it does help to talk to someone or at least bounce your ideas off someone who knows a little more about this, right? So if your accountant or CPA doesn't know about the Augusta Rule, which a lot of them don't, and even some of them do, but they're not comfortable with it, it's their prerogative to say, I'm not going to honor that. I'm not going to help you with it. So reach out to someone like even like Kristen and I, or to like figure out like, okay, actually, how do I put this together, right? And make sure that it's going to stand under scrutiny.
And the contact information you both supplied is going to get in the show notes. So if anybody wants to do that, you'll be able to do that. Okay.
Great.
And Kristen, you had, screw ups that you see people making.
Yeah.
With a smile on your face. I can't wait to hear these.
The biggest thing, and again, is because it requires some work on the taxpayer's part, they don't go out and do the comps. Like they just make up a number. That and they just make up a number and like, oh, let's just do this. That and the other biggest thing is they don't actually get a lease in between the company and the individual. So
does that have to look any different because it's the Augusta Rule, or could you just go to your attorney and say, or the right kind of attorney and say, I need a lease between this party and that party for this?
You can choose to go to an attorney, or if you wanted to, if the individual wanted to draft something themselves. I mean, again, it's all about the documentation, excuse me, about it. So there's some ways, and again, some clients say, oh, well, we lease our building, for example. We got a medical practice. My father-in-law was the first plastic surgeon in the city that I live in, and he's 85 and just retired.
Okay.
So, his medical office building was owned in a different entity than what his practice was. Okay. So one of the things that he got corrected on years ago was that the medical practice was paying rent to the entity that actually owned the building, but there was no actual lease. It's the exact same concept here. And so again, if a practitioner feels more comfortable just having an attorney send them over like a blanket, maybe page and a half lease. Again, the key here is to keep it simple because, as a business, are you really going to sue yourself is what you're protecting on?
It's true. It's true.
So what are the chances of a lawsuit developing because of this? Slim to none is what I'd like to think.
It's probably just got a basic contract muster, right?
It's all about the documentation.
Okay.
Is it a legitimate lease between the business and the individual?
And that's what's going to be looked at if the IRS ever wants to audit or look at this deeper. They want to see if it's a legitimate lease or not.
Okay. Part of the documentation. It makes sense.
Right.
I think I'm getting it. I do. This has helped. If I'm the only one who got helped by this in this episode, then it's a big victory because I've read this thing 5 times. Like I said, I don't know. Anyway, couple of wrap-up questions I ask guests of every episode. The first one is there anything you think I should have asked you, but just didn't think to ask you about this?
On my side, I don't think so. I think we've covered a lot, and I don't want to overwhelm with too much information at once.
Yeah.
But I think we've covered a lot of different things. But of course, everyone's situation is a little bit different, and there's nuances with everyone's type of business, and depending on what state you're in and where you're at. But overall, I think we covered pretty good amount.
Okay, Kristen, what about you?
Yeah, I don't think there's anything that we missed. I guess the one thing I would offer your audience is just like we, you advocate for patients to work with their physicians, ask questions and be their patient advocate. Again, this is one of those things where, there are some things that you can do to increase your net worth, to make your dollars that you work so hard to earn, to keep them. And don't be afraid or intimidated if you don't understand it. The key is going, you know what? I think I may have a fact pattern here that I may be able to take advantage of, and going to ask your accountant or your CPA, say, what do you know? Do I qualify for this? And be very be proactive and work with accountants and CPAs that are proactive, not necessarily reactive, when you're trying to figure out the best way to manage
Okay.
cash flow inside your business.
Which is a perfect segue into the second question I ask every guest, which is, so we've caught a listener's attention. They're listening, like, they get excited by it, but they've never done it before, so they're stuck. They just don't know where to start. Is there one or two super simple practical things you could recommend they do, to get started? So how do I do this? What would it take? Is it just call your accountant and say, do you know about this? And do you do this? Or is it that simple, or what do you think?
I would say, yeah, call your accountant and ask them if they know about Augusta Rule or Section 280A rental. And if they don't, then seek someone who does, right? There's lots of, we shortly will have probably a blog post about this, so we can post that too. So blogs are an excellent source of education as well, but also it's really important to work with someone one-on-one, right?
Mm-hmm.
So work with your accountant, work with your CPA to do it, to figure it out. But if not, find someone that does.
Okay. And is 280A, is it literally called the Augusta Rule? Are those words used in the tax code?
No, it's just Section 288. It's not. In fact, I'll have to look up the actual text of it, but it's not called Augusta Rule. It's not
Wouldn't
called
that be cool if it was actually
Augusta's more of a nickname because that's how it was born. Right?
That's how it was born.
Yeah.
Okay, good. And Kristen, what about you? Like super simple.
Super simple. First, maybe recognize that this isn't a do-it-yourself kind of thing.
Mm-hmm.
Call your CPA, accountant, say, do you know about this? If you don't, can we schedule a 20-minute call to see if this works for me? I understand that these are the steps.
Mm-hmm.
Can we do this? And can you take advantage of it 2024 tax year? Because again, just super simple steps. If you can take advantage of it, you want to get started sooner rather than later. So when tax time, February, March 15th deadline's coming up for 2025, for the 2024 tax year. If you haven't put that lease into place or physically written checks or moved money, you've left money on the table. So the sooner you get started, the better. So we're already at the end of March. I know it's in the middle of tax season, so it's not necessarily the most opportune time for CPAs and accountants, but be proactive about this and get this done sooner this year rather than later, because you are just leaving money on the table for the 2024 tax year.
It's true. Yeah, we're recording this in the tail end of March, where there's snow on the ground in Chicago where I am. But yeah, so the timing not so great, but when the episode airs, it'll be a little slower, hopefully, for them.
Awesome.
Yeah, good. Kristen, Stephan, thank you so much for shedding light on this. It's not the first time I've heard of the rule, but it's the first time I think I understand the rule. Hopefully that's true for lots of other people who've listened as well. So thank you both for coming on. I really appreciate it.
Awesome.
Thanks,
Thank you, Carl.
We appreciate it.
Yes, and a couple of points before we wrap up. First, if you are someone like Kristen, Stephan, or myself that seeks to serve private practice owners, or if you're a private practice owner yourself, either way, if you've got some experience or expertise on the business side of private practice, please, we want you to come on PracticeCare and share your knowledge with the rest of our listeners. In the show notes for this episode and every episode, there's a link, a couple of clicks, tell us what's on your mind so we can get you scheduled as soon as possible. And finally, if you haven't done so yet, please subscribe to PracticeCare. We're on every platform and player. It's the easiest way to stay up to date on new episodes, which we launch every week. And once you subscribe, you'll stay up to date. Thanks very much, and until next time.